This is Joel Block, and you're listening to the Passive Investor Show.
The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com. Hey PI listeners, this is John Fortes. I'm making it a point to speak to as many investors as possible. My goal is to position myself to be a blessing to my network through conversation. How could one be a blessing through conversation? The easy answer is by listening. A simple conversation can open many opportunities and doors. I always ask myself this: what do I have to lose by having one more conversation? Going back to high school, I've connected friends and family in my network to one another, even if it didn't benefit me. And I continue those same principles and practices. Why? Because it's the right thing to do. If I can't help you, I probably know someone or something that can probably solve your problem. I'd love for you to become a part of that network. Go to www.johnfortes.com, create your investor profile, and schedule a call. How can I best serve you through conversation? In the words of Clarence the Angel from It's a Wonderful Life, no man is a failure who has friends.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. Welcome back, everyone. Just in case you didn't get enough of Joe Block, we brought him back to our infamous Quick Hitter Investor 101 series. Joe Block of Bullseye Capital. We want to bring him back and ask him one question for us to learn and just kind of like, if you don't understand anything about Joe Block, I gave a great bio in the previous episode. So it's great to have you back, Joe. Thank you for your time.
Happy to be here. And how can I help you now?
How do we start a real estate hedge fund?
Well, first of all, I do a 3-day training on this that helps people get just to about first base. So, in these couple minutes, they're going to be taking batting practice. They're not even going to get up to bat, or really. But basically, putting together a fund requires first that you have a plan. You have to have what I call a charter. Is what kind of assets are you going to buy? Are you buying multifamily? Are you buying nodes? Are you buying commercial? What are you doing? And that's an important question. Once you kind of understand what you're doing, and by the way, you don't want to mix asset classes. And the reason is that there are investors who like multifamily. There are investors that like commercial. It's unusual to find somebody that likes both. So you're not going to get twice as many investors. You're going to alienate half the, you're going to end up alienating a lot of people, and that's not going to go your way. So you figure out what your charter is, what you're going to do. You identify that. You write it down, you start making some projections about what might happen. And ultimately what you have to do, and you have to engage an attorney. And the way that we do it in our company is that I'm the businessman. We have an attorney because there are just an enormous amount of business issues that come up. And the attorneys very frequently just do not give the right advice because that's just not what they're trained to do. And they also aren't in the field. I mean, they're just not talking to investors all day long like maybe I am or like maybe you guys are. And so here's what ends up happening is that you set up an LLC that's going to be your fund. There's got to be a manager of the fund. That's another LLC. So the manager, you got to make a lot of business decisions about how many classes of shares, how you want it to work. But ultimately, you're going to create 3 documents: a private placement, which is the documents that tells the investors all about the shares that you're selling; an operating agreement, which is the description of the relationship between you and your investors; and finally, the subscription agreement, which is basically your sign-up form. And you got to have a little marketing material to kind of tell your story with, because those legal documents are not marketing material. In fact, they're anti-marketing material. because if they do their job properly, they're going to scare the investors away, because then when they come back and they sue, the attorney will say, we told you all these things could go wrong. Did you not read this material? Isn't this your signature? And of course they read it, but people still get upset. And sometimes things go wrong. And that's why promoters need to have these documents in place. They just do. So it's not a terribly complicated process, but it is imperative that you get it right, because you're going to be stuck with these documents for years. And if you are dissatisfied with your documents, and here's the thing, a lot of people try to cut corners. When you're a young family, you don't buy a 1-bedroom house. You buy a little bigger house because you're going to grow into it. You're going to have a family over time. And that's the same thing for your syndication documents. You may not understand what your needs are now, but you can't play golf with just a driver. You have to go out onto the course with more tools of the trade, whether or not you know how to use them early on. And it's the same thing as a syndicator or a fund manager, is those documents give you permission to do things that you may not understand now, but a year from now, you're going to say, God, I sure wish I could do this and this. And if you don't have the tools, you can't do it. And by the way, if you forget, let's say when you're making your fee schedule, how much you're going to be paid, if you forget to add a fee, let's say you forget to put in your brokerage commission, you can't go back to the investors in 6 months, say, by the way, I'm really sorry about this, but I forgot to put in my brokerage commission. Can we change the documents? Because once they're signed, sealed, and delivered, they're done. And you can't change them unless everybody agrees. And they're not going to agree to let you have more money. They're just not going to do it. So you want to make sure that you're getting it right the first time. You put all the bells, whistles, tools, tricks, whatever you have that need to go into the bucket. You put it all in there the first time, because that's your one chance to make it happen. You put your documents into circulation. You let people know that you're out there doing deals, and hopefully you're starting to build up a Rolodex of people, or some kind of a database of people, and you're ready to start contacting them once you have your docs.
And when you're raising the capital and you close on the fund, are you collecting the capital day one, or are you calling it down as needed?
We don't. I don't recommend that smaller investors get into a situation where they do drawdowns. Never, because if you're an institution, you commit 20 million, 5 million a quarter, that's fine. But if Dr. Smith says that he or she is going to commit 500 grand, you don't take 100 and a quarter every quarter, because Dr. Smith may just find something better to do with the money and not have the money when you're ready for it. It's just the way it works. And you can scream and yell and threaten to sue and all the other stuff, but the truth is, you, the syndicator, are the one that's going to have egg on your face, because you don't have the money to do whatever you're supposed to do. So you get the money, and people are going to say, well, I don't want to have to pay the preferred. That's small time thinking. And for people who think small, maybe this isn't a great business for you. But if you're worried that you're not going to have deal flow for your fund, maybe running a fund isn't the right idea. Maybe what you need to do is raise the money on a syndication per project basis, so you do a better job of matching. The fund business requires that you have deal flow to apply the capital to. The syndication business really says that you're just going to match the money in the property. So you have, it just depends what you prefer.
Thank you for breaking that down, and thank you for coming back, Joe. Joe, how can we find you?
Bullseyecap.com. Very simple.
Awesome. I appreciate you. Thank you for coming on. Thank you for sharing your message, and thank you for the great conversation.
Hey, man, happy to do it.
Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, if this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet, happy investing. PI listeners, I'm grateful for your time, and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.